Will Santa be coming to the markets, or are we going to continue for a third down week in a row? Let's take a look, see what's going on. Everybody's looking for the Santa Claus rally. And right now, the Dow closed down 0.85%, 281 points, S&P down 1.1%, NASDAQ down 0.97%. So it's the second straight week that the markets are down, with recession fears growing and everybody kind of pontificating whether or not we're going to be in recession, how deep, how long, how short, how shallow, how deep, how shallow, how long. So any number of combinations that everybody is predicting, and we're not going to know till we get into next year, because the consumer is still spending, albeit some reports are saying that spending is down this year, but people are still spending for Christmas. We have a lot of savings, people racking up credit, things like that. So it's kind of hard to read into a lot of the economic data right now because of prices going up still. Ford raised prices on their new F-150 Lightning, up 40% since they launched. So prices are still up on a lot of things. We know that housing is still up, even though we're having corrections in some markets. They're still correcting from exponentially distorted levels. So even though you've had 10%, 20%, 30% price reductions and corrections on certain prices of houses in certain markets, it still is coming off of such distorted levels, it doesn't really mean anything. And rents are going up in a lot of markets, and housing inventories still remain stressed in a lot of areas. And inventories as a whole are strained across the board for a lot of things. The labor market is still very distorted and unbalanced in terms of the amount of jobs available for the people willing to take them. So employers are having to pay more. People are striking. Starbucks, 1,000 stores or something like that of employees are going on strike. So a lot of different things happening out there in the labor market still, with a lot of pressure on employers, which means they have to raise prices and going to pass that along to consumers. Same thing with manufacturers. That's why Ford is up, the cost of the batteries and the parts and things like that. And, if you're out there spending money in the economy, there's not a whole lot coming down except gas, which is great, but it's still high. It's still not down to where it should be. It should be in the low twos, national average low, to mid twos, maybe, still over $3. And the median house price is still rising. So a lot of work to get done yet. The Fed announced that this week, and the markets still do not believe the Fed. They still think the Fed's going to come to rescue the markets. And the real question is, where are we going to be from an inflationary standpoint? What the Fed has said is rates are going to continue to go higher to that 5.25% to 5.5% terminal rate that they're targeting. What that means is, what the Fed's really saying is they expect inflation to stay higher. They're still targeting 2%, but I don't know how realistic that is with wages increasing, with supply chain issues, with deglobalization. I'm not sure prices will come down anytime soon, if ever at all, below 4%, much less 3%. And getting to 2 without doing serious damage to the economy. You're going to have to really slow down the economy to try to get back to 2% in any meaningful way, or any meaningful level of inflation. So the real question is, are wages just going to stay higher? The cost of goods going to stay higher? So people are making more money, therefore they can spend more money, and inflation, the new normal rate of inflation is going to be 3 or 4%. And the new normal rate for the Fed funds is going to be higher than inflation. So it's 4 or 5%. That's just where it's going to stay. Mortgage rates are going to stay higher than where they've been, which historically, where we are for rates is not bad. In the housing market, 6%, 5.5%, 6%, that's a great rate historically. We've just had such a distorted level of everything over the last couple of years, almost 3 years now, with artificially low rates, and the levels of pricing that people's view is just kind of distorted in terms of what real pricing should look like, what real rate should look like. So it's kind of trained the consumer in terms of what their expectations are for pricing, for wages, and for the cost of goods and housing and interest rates and things like that. So interesting times ahead. We'll be able to digest more of that as we get into next year, once we're through the holidays and the consumer really starts to vote with their pocketbook. But in the meantime, let's take a look at the charts and what is going on. Of course, all the other news out there with Binance, proof of reserves, and their auditor pausing all work because of the interpretation of their reports, and just uncertainty around assets and what's going on in the markets, and FUD, around Binance, fear, uncertainty, and doubt. Is it justified? Well, you should be afraid because you can lose all your money with these exchanges. Nobody knows what's really going on behind the scenes, what they really have, what they don't have, what they're really doing, what they're not doing. What we do know is that they are definitely not doing things in a legal, fiduciary manner. We just know that, right? So they're laundering money. There's a lot of collusion going on in the space, manipulating prices. When you have the exact same price action across multiple assets, that they are colluding and manipulating markets together, which that happens in traditional markets too. It's not unique to crypto. Uncertainty, well, there's a lot of uncertainty because Tether and Binance will not provide real audited financial statements. They will not bring in forensic accountants and show their bank accounts, show the proof of funds, show what their real statements look like, financial statements, because they can't. If they do, they will expose themselves and they will expose their clients doing illegal things. That's just the truth. That's not FUD. That is the truth. Doubt, well, uncertainty and doubt kind of go together, right? So until you put your cards on the table and show complete 100% transparency, meaning you bring in forensic accountants and legitimate Big Four accounting auditors and open your books up and let them track the money and trace the transactions and prove what you're saying, then there's going to be doubt. So a lot of people use the word FUD to kind of dismiss anybody who's questioning something, and there's good reason and good cause for it. And as you've seen, a lot of people lately in the crypto space and in the stock space losing all of their money, there's good reason to be afraid. There's definitely good reason to have uncertainty, and they're bringing doubt upon themselves. So the FUD is on the exchanges and it's on Tether for not proving otherwise. Instead, all they do is say, it's coming, it's coming, it's coming, and they never do it. So that's why you're going to have that until you prove otherwise. So right now it's guilty until proven otherwise, not innocent with what's going on and the way things are happening right now. So here's the Dow, and this is our major trend line on the Dow here. The Dow broke out above it and has found support on this trend line. So I'm looking for Santa Claus to come to town. So what we're looking for is for the Dow to kind of continue on up before it rolls back over. And is this going to be the new kind of trend for the Dow right here in this bear market, something like that? Or will it break down, find rejection, and then continue down like that, and then keep testing this trend like it's been doing pretty much this whole bear market trend and cycle that it's in right now? And this is last December, on this day, the 16th of December. This is what happened over that course of a couple of days until the 20th of December. So that was the 16th was a Thursday, 17th was a Friday, and the 20th was on a Monday. And then the markets were off to the races up until basically January 4th. And then it was downhill from there. This was in a macro bear market cycle. It was risk off. The Fed told everybody it was risk off because they said inflation, tightening. That's why we were all shouting from the rooftops back here, it's time to go to cash, get on the sidelines unless you can trade these ranges efficiently, which is a very difficult thing to do. And most people have not done well during this cycle, especially if you're using leverage, you're shorting, those types of things. All I do is I buy and sell spot. I do not use leverage. I do not short markets. I just buy on the dips and I sell on the rips. I don't catch all of this, but all you need to catch is a little bit, and you can do pretty well. And it's been pretty easy to spot these because of the VIX and because of this trend. And you don't need to get the complete bottom or the complete top. But if you can catch the meat of these moves, you can get 4 or 5% a move on these things, which is not bad to do multiple times. So that's kind of been my strategy during this bear market. So the real question is, are we going to repeat last year? And you can reasonably expect a 6 to 7% rally, which is what happened last year, into the end of the month, first of the year, because that's kind of exactly what happened last year. And it was a bear market risk off cycle when that took place. NASDAQ, same kind of thing, except NASDAQ has rejected on this trend and has not broke the trend line yet. So a rally equivalent to last year would look something like this for the NASDAQ, and then kind of go back and maybe kind of continue to test this trend line and work its way down. So that's a 5 to 6% rally, just like it had. Well, I think it might have been about 7% last year. Yeah, 7%. So if it were to do something like this going into next week, that would very well be a 7% rally, potentially, maybe even getting above that trend line. But we'll see if it can make it above. Then the S&P, same thing. S&P rejected off the major trend that it's been respecting the whole way through so far. And then same thing. We'll see if the S&P comes up and checks that trend line. What about Bitcoin? Bitcoin last year we talked about had a 15% rally at this time. This is Bitcoin on the same day last year, kind of consolidating around, rallied, and then downhill from there. Bitcoin kind of led the markets down last year. And it has not participated in the big rallies with the markets. It did the last couple of days, but immediately rejected. And what can we expect from Bitcoin? So basically, we've seen this kind of thing pretty much across the board with Bitcoin in the last couple of areas where it kind of gets in this higher high, higher low, and then has one last pop and then kind of falls off a cliff. Pretty much for the last, really since last year. I mean, it's kind of repeating this pattern over and over and over since the bear market's been happening. So what can we expect for Bitcoin? You get this little pop, drop, kind of rises, drops, rises up. And this was the whole Do Kwon era, and Michael Saylor was buying in here. Again, popped up that last time, dropped, same thing here. I mean, kind of working its way down level after level after level. Each level, you have your usual suspects telling you the bottom's in, telling you this is the best buying opportunity of your lifetime, showing you custom indicators that are nothing more than lagging indicators that follow price action. If you have RSI, MACD, any indicator you want to pull, it's going to follow, it follows the price because it's a lagging indicator. It's an average, it's moving averages, it's RSI is averages, all those things are averages. So if price all of a sudden dumps down, let's say Binance collapses, Tether collapses, and price just kind of falls off a cliff, all of those averages and custom indicators are going to reverse and fall off a cliff with it. And if all of a sudden something happens and Binance proves everything and Tether proves everything and the markets start ripping and going off to the races, all those indicators are going to reverse. Price action is going to reverse with it. So, custom indicators don't really mean anything at all in terms of, what's going on. At the end of the day, the easiest thing to do is, well, there's two things. So let's do this. The easiest thing to do, first of all, is turn off the noise and just look at the trend. I mean, this is so much easier to see when you look at it in this context, is just a clear, defined trend, kind of breaking out here and there. But at the end of the day, this is your macro trend right now. So is there going to be support here? Yeah, maybe you can move that to right here. But, trend line, major trend was right there. The trend's down, lower highs, lower lows, until otherwise the trend is down. Right now it's moved out here. And Bitcoin is kind of testing that major trend line right there. Let's take a look at one other way to kind of view this. Sometimes it's fun to invert the scale and then kind of look at it from that perspective. And what does this look like? Double bottom, rising into the bull flag, and bam, just kind of keeping on continuing, looking like it wants to rise up into major resistance right here, into this area. Historically, that's been major resistance. Let's take a look at it on a weekly time frame so you can see it in even more context. So it seems like price wants to kind of continue on from here and reach out to this area and then roll over. So if we reverse that and take a look at it, and that puts us back into our price action. So what does that look like? Price kind of continuing on, working its way down to this major market structure level of support around 10, 12, 13,000, somewhere in that time frame, somewhere in that price range. And, like we talked about yesterday, and we've been talking about all last few videos about narratives, that if everybody's expecting 10K or 12K or 13K, you're not going to get it. Well, they said that at 30,000. They said it at 20,000. They said it at 18,000. They said it at 15,000. So that's just not the way it works. If everybody's expecting it, sometimes it goes way lower. If everybody's expecting it, sometimes it goes way higher. So those narratives are not a thing. If everybody's expecting recession, I'm going to take the opposite side. We're not going to get it. I mean, that just doesn't even make sense. A recession is what it is. It's slowing growth because consumers are pulling back, and it's the result of the Fed saying we need to destroy demand. So these are the things I'm looking at. I will see you on the next video.